This might be the most important finance video you watch this year, so pay close attention because the 2008 style Lehman Brothers collapse is brewing. You may have heard of the bank Silicon Valley Bank, which isn't to be confused with Silvergate Bank, which is a smaller crypto bank that went under a week or so ago. Silicon Valley Bank is a much larger bank which is currently suffering from a bank run. Silicon Valley Bank is the 15th largest bank in America, and they have funded around 50% of Silicon Valley startups. What is happening right now with Silicon Valley Bank has led Bill Ackman to suggest that we need to bail out this bank right now, and it has led Michael Burry to suggest that this might be the next Enron. Even if you're not invested in this bank, it's important to pay attention to what is happening with this bank because there's fear that contagion can spread from this bank to the entire financial market. So to explain what is happening with this bank, we first kind of need to explain how banking works. What banks tend to do is they collect deposits from customers and then they invest those deposits out to collect yields on those deposits. Now, normally what banks will do is they will take that deposit money and they will invest it into bonds, and those bonds will pay a yield. And typically that's pretty safe. And that's especially so if they're investing in short-term bonds. Now, some banks will do long-term bonds like 30-year or 10-year bonds. Now, what has happened to those sort of bonds recently is as interest rates have gone up, the value of those bonds have gone down. Now, it tends to work that way because say I have a 30-year bond that I bought a couple years ago when interest rates were 2%. That bond is paying 2% over the course of 30 years. Say I go to sell that bond, no one's really going to want to buy it off me because interest rates are, 4 or 5% right now. So this is exactly what is happening at Silicon Valley Bank. They've invested in a lot of long-term bonds, and now they have unrealized losses because of those long-term bonds, and they've also invested in a lot of tech startups, some of which aren't doing so well right now. Now, when people started to get an idea that this was happening, they came to Silicon Valley Bank to try withdrawing their money, and that forced Silicon Valley Bank to start to realize some of those unrealized losses, which has created a huge problem for the bank. Now this contagion is starting to spread to other banks who are in a similar position. First Republic Bank, for example, is down 21% on the day because of similar fears. Now we have some contagion because there are fears that other banks are in a similar position, but there are also more fears that other larger banks hold the debt of banks like Silicon Valley Bank. And then when banks like Silicon Valley Bank go under and other banks are holding their debt, then that debt gets marked to zero on their balance sheet, and that will create other problems for those bigger banks. This is eerily similar to what happened in the 2008 financial crisis, except in the 2008 financial crisis, the banks were taking big losses on mortgages. This time they're taking losses on the bonds they own and the businesses they've loaned out money to. Now, the fear that this contagion could spread is what has been causing the markets to fall on Thursday and Friday. So stay tuned to keep posted on how this plays out.